Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Saving is a very fine thing, especially when your parents have done it for you. A bargain is something you can't use at a price you can't resist. The time I was kidnapped, and the kidnappers sent my parents a note. They said, "We want $5,000 or you'll see your kid again." Rodney Dangerfield. Anyone who has ever struggled with poverty knows how extremely expensive it is to be poor. Whenever you hear the word save, it is usually the beginning of an advertisement designed to make you spend money.
A rare sight in global markets. US stocks are trailing the rest of the world by the widest margin in decades. For years, global investors crowded into American equities, tech dominance, strong growth, deep liquidity. Now the tide appears to be turning. Capital is slowly rotating towards international markets as investors reassess valuations, geopolitics, and policy risks tied to US politics. When the world's most crowded trade starts unwinding, even slightly, the ripple shows up everywhere, from currencies to global markets. Modern warfare isn't just about tanks and fighter jets anymore. It's about eyes in the sky that never blink. The US drone arsenal ranges from the tiny $35,000 Raven to the massive $140 million Global Hawk, capable of flying 5,400 nautical miles and watching entire regions. What makes them powerful isn't just firepower, it's persistence. Drones like the Reaper and Predator can stay airborne for over 24 hours, tracking targets, monitoring infrastructure, and striking when necessary. In conflicts today, control of the skies increasingly means continuous surveillance and not large troop movements. A strange reversal in markets. The Magnificent Seven tech giants are all down this year, and every single one is underperforming the S&P 500. Microsoft is off nearly 19%, Tesla about 10%, and even the AI darling Nvidia is slipping. Meanwhile, the broader index is still slightly positive. This is what happens when the most crowded trade on earth gets a little too crowded for comfort. After years of carrying the entire US market, big tech is finally taking a breather. And when leaders stumble, the market suddenly remembers that there are 493 other companies in the S&P 500. India's small and mid-cap valuations are finally coming down from the stratosphere. After peaking near 46 times average, the median valuation has slipped to about 36x, still pricey but clearly moving towards normal levels. Historically, during real market resets, these multiples fall closer to the low to mid-teens, which is when long-term investors usually find their best opportunities. For now, the froth is slowly deflating rather than collapsing. One state quietly dominates India's economic map, Maharashtra. Its economy is now estimated at 51 lakh crores, roughly a $500 billion GDP, making it comfortably the largest state economy in the country. But the interesting twist is income. While Maharashtra leads in size, per capita income ranks around 5th, behind states like Telangana, Karnataka, and Tamil Nadu. That tells you something important. Maharashtra is an engine of scale, finance, industry, and services, but growth is increasingly spreading across multiple Indian states. History has a funny habit in financial markets. Geopolitical shocks create fear and often mark market bottoms. From the Gulf War to the Kargil conflict, the 9/11 attacks, and the Russia-Ukraine war, the Sensex typically fell about 9 to 11% during the panic phase. But what happened next is the real story. On an average, markets delivered double-digit returns in the months after the correction, once uncertainty started fading. Investors sell first, think later, which means the biggest opportunities often appear exactly when the headlines look the most frightening.